The airlines have really been cleaning up this year. Their stock prices are way up. They have record profits, and people just want to travel. The COVID years really kept people indoors, and they're just fed up with it. They're willing to pay whatever it takes to take a nice vacation, either domestically or internationally. Today, I want to cover United Airlines. This is one of the airlines that's just really benefiting from the economy of people wanting to go out and travel. My name is Victor. I have an MBA, a lot of business experience, and I do analysis on companies that I look to invest in. In this video, I'm going to be covering United Airlines. I like to follow a process as I look at companies that I want to invest in. The process involves 4 key questions, followed by the decision whether I want to buy more shares, hold, or sell my shares. In this case, I want to find out if I like the company, if I want to be a part owner in the company. Do I understand the company? Is it an industry that I want to invest in? Second, do I believe the management team's doing a good job operating this company? Is debt less than 3 times EBITDA? I want to discount the stock. My intent's to make money on this investment, and I want my stock price to go up. If I get a discount, chances are it's going to go up. Based on the answers to those questions, I either buy, hold, or sell my shares. I normally historically have not invested in airlines all that often. Oftentimes, they're a risky investment with not a lot of upside. But with COVID and everybody being locked up and cooped up and really wanting to travel, I thought investing in an airline was worth it. So I investigated airlines and felt that United was the best investment to make. And I bought into them starting a year and a half ago, 2 years ago. And it's been a really good investment. I think United is very well run. We're going to look at their financials. They announced their earnings yesterday, so we've got fresh data. And the industry, again, not an industry that I imagine I'm going to be in for a long, long time. I'm just taking advantage of some big factors that make airlines really attractive at the current time. So COVID put some industries pretty much on a full lockdown, and airlines were one of those industries that were just so hit hard. It was incredible. You look at where United was in 2019 before the pandemic. They were a $43 billion revenue company. And during the COVID year, they went down to almost a third of the revenue. But the good news is that the airline has recovered, and now their revenues are above both 2019 and 2018. So good job to United for getting their revenues back on track. I think that's a big accomplishment. The company announced their earnings yesterday and really good growth. If you compare the most recent quarter closed, which is Q2, compared to Q2 of 2022, 17% growth in revenue. Great job. For the first half, they're ahead of the number by 30% compared to last year. Their profits are just really taken off. They are up 72.8% if you look at their profitability of United for the quarter. For the year, they're doing great. They're up $1.474 billion, which is great. So good to see this airline profitable again and growing. And really, I think the next couple of years are probably going to be just as good. Looking at their statement of cash flows, it also looks really good. The cash flows from operations really went up. They're investing in the business, putting $3.2 billion back into the business in the form of capital expenditures. That's really good comparison to the first 6 months of 2022 compared to the first 6 months of 2023. Free cash flows are up 15% from $3.2 billion up to $3.68 billion. I'm going to value the United stock using 2 methods. First, by discounting all the free cash flows I expect from the company in the future. The second is looking at their earnings per share and then valuing the company based on the earnings per share that I expect the company to produce. Let's start with the free cash flow method. I'm going to start with year to date. I'm just going to multiply it times 1.5. They're 6 months through the year. Logic would say, well, multiply it times 2, but I want to be conservative. So I'm just going to multiply it times 1.5. It gives me a $5.5 billion run rate in that I would expect at least in this particular year. I'm not going to grow the first 3-4 years. I'm actually going to take them down by 10% per year just to be conservative. I don't know that these great days of these high fares and high profit are going to last forever. I don't expect them to. It's a very, very good year, but I expect them to go down a bit. After that, they'll grow at 0%. Their terminal value of all free cash flows in the future are going to be $40.6 billion. Collectively, I'm going to discount all these free cash flows by discount rate. And I'm going to go with a nice high discount rate of 11%, which is the weighted average cost of capital. And the net present value of all those free cash flows is going to be $39.3 billion. I'm going to add the cash that's on the balance sheet and subtract the debt that's on the balance sheet to arrive at an equity value of $28.1 billion. The company is currently just about $18 billion of market cap. So it offers up a 52% discount on the stock using the free cash flow method. Using the earnings per share method, they're at $11 per share earnings per share. And that was guided by the management team yesterday. I don't think that's going to stay forever. So I'm going to bring it down by 10% per year just to be conservative. And I'm going to apply a PE, very good PE of 10, nice and low. And using those figures, I get a 66% discount on the stock. So really good discount rates using both methods. I'm going to combine the two, putting more weight on the free cash flow method. And I get a combined 57% discount on United currently exist. It's no secret that the airlines are very profitable, generating lots of free cash, which is why United stock is up 52% year to date. They've had a heck of a year. They announced earnings yesterday and they went up a couple percentage points today, which was good to see. So let me scorecard United Airlines stock. Do I want to be part owner in this company? Do I want to be part of the industry? And at the current time, yes. Really saw this strong demand coming. I invested a couple of years ago, and now it's come back to pay me back for investing in the airline when they had some tough times. The company is operated very well. I really like their management team. They're doing a great job. Debt, if you look at net debt, it is less than 3 times EBITDA because they have almost $20 billion of cash on the balance sheet and $30 billion of debt. And their EBITDA is about $5 billion. So it's less than 3 times EBITDA. They offer a nice discount. And therefore, I'm going to be buying more shares of United since it is a discounted stock and they're doing really well. Hey, thank you for watching the video. I appreciate it. Please leave comments on both United as well as the videos, what things you liked, what things you didn't like, and really would appreciate those comments. Keep in mind, everything that I do is for entertainment and educational purposes. I'm not recommending you buy United stock nor sell it. This is not investment advice. Good luck investing in 2023.